Good day, you're watching Businessworld Live. I'm Delos Santos, and here are today's top stories. S&P Global Ratings expects Philippine economy to grow faster than initially estimated this year, but the credit rater sees slower growth in 2023. Meralco says it is now reviewing the temporary restraining order on its power supply agreement with a subsidiary of San Miguel Corporation to determine their next steps. The Bangko Sentral vows not to raise the minimum capital requirement for rural banks in the next 3 to 5 years, while the Rural Bank Strengthening Program is being carried out. And the demand for tablets drops as more and more students return to in-person classes. Let's begin our broadcast with S&P Global Ratings upgrading its growth outlook for the Philippines this year, but trimmed its projection for 2023. The credit rater now expects the domestic economy to grow by 7.1% for full year 2022, faster than its initial estimate of 6.3%. But for next year, S&P forecasts a growth of 5.2%, lower than its initial projection of 5.7%. S&P says the projected slowdown for 2023 is due to the impact of higher interest rates as well as elevated inflation. Headline inflation accelerated to a near 14-year high of 7.7% in October, while the Bangko Sentral has so far raised interest rates by 300 basis points since May. This brings the benchmark rate to 5%, also the highest in almost 14 years from the pandemic. Aside from the Philippines, ILO believes countries like India and Mongolia also have some potential in boosting manufacturing employment. However, ILO admits that it will remain difficult for the Philippines, India, and Mongolia to compete for foreign direct investments in manufacturing against other countries with lower costs and more advanced infrastructure and logistics. In its recent report, ILO says Asia-Pacific labor markets have partially bounced back from the impact of the pandemic, but full recovery is still uncertain. The Philippines' jobless rate dropped to 5% in September, with the manufacturing sector posting the highest monthly increase in jobs at 780,000. Philippines, and how and why did you eventually reach that big decision to actually exit the consumer banking space here?
Well, essentially, it's an overall refocus on strategy, where we can use our capital the best and try to figure out how we fit in the overall ING ecosystem. So the decision was made to essentially focus on wholesale banking activities. That means corporate investment banking type of activities, and basically make our way into determining and providing services in that arena, which we believe we can do quite well.
Okay, given all that, where are you now in that exit process in the retail banking space?
Yeah, so the digital retail app was actually shut down at the end of October. Mm-hmm. We returned probably about 99.5% of to all clients, rather their money, mm-hmm. and effectively, the retail bank itself will cease operations at the end of the year, so December 31st of this year.
Okay, so definitely by year end, tapos na talaga, no? But what's your general outlook here for the financial space in the Philippines?
Well, our outlook is very much linked to how the economy is expected to grow. And we do think, by the way, that in the short, especially in the medium to long term, the prospects for the Philippines are very bright. Mm-hmm. And that's why we've decided that we'll focus on the wholesale banking space, where we have essentially a very big platform, and we've done extremely well over the years in terms of trying to ensure that we can service our clients. We have very good relationships, primarily with the largest conglomerates, although we do deal with other corporates, and let's call it the activity levels focus on various things from our financial markets, which means our trading activity, interest rates, currency exchange. We've also done very well in our merger and acquisition advisory and overall advisory business, and of course our capital markets business, primarily in the debt capital market side, along the loan capital market side, have done well. So we think that these activities, obviously with the background of a sustainable and green kind of future, is where we're going to play.
Okay, but even as you say that, like what you mentioned earlier, that there are of course bright prospects, at least for the Philippines, proves to be bright at least. There are still some challenges up ahead here. For you, exactly what near-term challenges are you seeing here for the banking space, including the prospects of a global recession, and how do you think, how well positioned is the local banking industry?
Well, first I'll say the following. That yes, there are global headwinds. Perhaps the Philippines is less affected by a number of these challenges. But as interest rates have risen, one of the effects, actually, interestingly enough, is that financial institutions and non-bank financial institutions tend to benefit from a relatively higher interest rate. So that probably improves, let's call it the net interest margin for many players when you're perhaps having a very close to zero type of interest rate environment. So that's perhaps number one. I think secondly, with all of the infrastructure requirements that this country has, a lot of the sectors that we deal in are certainly going to benefit from all the activity that is actually not just projected, but actually ongoing right now. So for example, you talk about the telecom, media, and technology space, right? There's a lot of investment going on in that sector. The infrastructure space, which really includes all types of buildings, roads, tollways, airports, ports. This is not just a focus of the administration, but also has been an activity level for many of the large conglomerates. And I guess finally, when we talk about healthcare and related items, these are going to give us and other financial institutions an ability to actually help participate, finance, and advise on, so that there should be more than enough activity in these sectors.
Given all that, I mean, like what you mentioned, the probability of you entering at least in infrastructure projects, does this mean as well involvement as well, or entering public-private partnerships here with the government?
Yes, and I think we're quite keen to increase our activity level in the PPP space. Obviously, there are maybe some edits to the implementing rules, which I think should benefit everyone, all the stakeholders. I think that's really one of the things we're looking at in terms of how the PPP Center is reviewing things. And when it talks about trying to be part of many of these projects, we are, by the way, incidentally, separate from PPPs, already involved, very involved in a number of infrastructure projects that a number of the large conglomerates are working on today. So this will just be maybe an add-on, if I can put it that way.
To be exact, what edits exactly are you looking at when it comes to implementations here of PPPs?
Well, I think the question of how the IRRs are looked at, when you take a look at also what the liabilities, responsibilities, and accountabilities are, so that it's probably better distributed amongst all stakeholders, whether it's government or the private sector or the financiers that you're talking about.
And then you mentioned also, as it is, you're already involved in some PPP projects or infrastructure projects, if I'm not mistaken. Can you give us more details on that? What are those exactly, and are you limited to financing?
Well, we're, when I say involved, part of it is the advisory function in terms of structuring some of these. We are involved in the financing. And when I talk about financing, that it's not just limited to providing lending. It also has to do with providing perhaps hedges and forward contracts for certain things that are going to happen. And maybe related to that, some of the activity that we're seeing actually includes some change of control in terms of firms, as well as maybe some acquisition deals that are related to infrastructure kind of build-up.
All right. Now, of course, what other industries or projects are proving to be attractive here for ING? Where do you see at least the biggest opportunities?
So I was mentioning that kind of like the ESG and sustainability space is something that underpins everything that I mentioned earlier, and we do believe we're a not just a thought leader, but actually a someone who practices what they preach. So, for example, just to give you a little bit of a sense, we actually moved in 2020 to our new wholesale bank headquarters, which is the Arthurland Century Pacific Tower. And that was the first triple, let's call it green building at that time. And if only to say that we're obviously focused on that type of action. So when we talk about sustainability and trying to help companies, it includes trying to help companies create their own ESG framework. So that's an advisory function. It also includes raising financing that you can probably link directly to what's called either as a green or sustainable type of benchmark. So we've done a few direct loans as well as a few bond deals that actually qualify under these global requirements.
But do you already have your targets, at least when it comes to sustainability, particularly in your portfolio?
Well, and we've said this on a global basis, that we'd like to increase the percentage of sustainable projects to about half of our total portfolio in the next few years. So clearly that will mean a lot of refocus and a lot more, how do I call it, direct pitching on the ESG, especially the overall sustainability front.
And where, at least, is the Philippines now, ING Philippines, when it comes to that?
And yeah, we're very active in this space and very eager to help our clients as well.
Well on your way to 50%, do you think?
Well, it'll take a few years. So as we build up more projects and hopefully our clients actually do see the benefit of moving to more sustainable type of financing as well as projects of their own. And I think that we're seeing this particular change. Suddenly this conversation is not a nice to have anymore, but really part of the individual journeys of various corporations.
All right, sustainability really proving to be the name of the game now more than ever. Thank you very much for your time and your insights and those updates, of course. Hans Sicat, ING Philippines Country Head.
Thank you.
Now let's pause for a quick break, but coming right up after that. The Energy Department calls on the Energy Regulatory Commission to look into the forced outages or limited production at 6 power plants in Luzon. More of that and other stories when Businessworld Live returns. Stay with us. distributor supply deal with a unit of San Miguel Corporation. Shaila Francisco with the details.
The Court of Appeals has issued a temporary restraining order on the power supply agreement between San Miguel Corporation, South Premier Power Corporation, and Meralco. South Premier generates power while Meralco distributes it. This means that South is a cheaper option rather than having the contract terminated altogether. The TRO on the power supply deal will be in effect for 60 days. The ERC is also worried, noting that the fixed price under the PSA has shielded consumers from volatile prices. As for the parties involved, Meralco said it is now reviewing the TRO to determine its next steps. It may need to source electricity from other sources in the meantime. For its part, SMC Global Power maintained that the ERC had been informed about their plea for a price hike, but they said the ERC chose to look the other way. They also assured the ERC that the public would still get the lowest possible rates despite the price hike. The company added that raising the issue to the CA is part of their right to due process. The decision. Shaila Francisco, We Are One News.
A consumer group says Meralco may need to find a cheaper power supplier after its deal with San Miguel South Premier Power was put on hold. The National Association of Electricity Consumers explains that Meralco has around 13 suppliers, but most of them charge higher than the San Miguel subsidiary. Speaking to the chiefs, the group's president, Pete Ilagan, said San Miguel's earlier petitioned rate increase could have brought prices to a level that is still lower than current charges of other suppliers. But now with the restraining order, power rates are expected to climb further unless Meralco finds a cheaper supplier.
Hindi po ninyo aprobahan ng price adjustment na final ng San Miguel at South Premier. Sana makahanap po tayo ng isang supplier na makatatapatan nito. Dahil sa alam natin na lahat ay mas mataas. Lahat po ng supplier ng Meralco ay mas mataas sa presyo ng South Premier at saka ng San Miguel.
Meanwhile, Power for People Coalition convener Jerry Arances told the big story that the TRO could also affect other power supply deals with fixed pricing provision. Arances explains that the fixed pricing provision shields power rates from the impact of external shocks. He also notes that San Miguel was the one that pursued fixed pricing only to withdraw when it became unprofitable.
It only means additional burden, actually, to the electric consumers. The whole argument against it will affect actually around 1.7 gigawatts. These are the power supply agreements entered by several companies in 2019 to 2020 that kumbaga promotes fixed price.
The Energy Department has called on the Energy Regulatory Commission to look into the forced outages or limited production at 6 power plants in Luzon on Monday, November 28. The DOE has ruled out issues of fuel constraints and said that power plant tripping caused forced outages in the plants. The outages removed more than 2,600 megawatts worth of supply from the Luzon grid. This prompted the National Grid Corporation of the Philippines to raise yellow alerts and briefly a red alert over the Luzon grid. For its part, Meralco said it put interruptible load program participants on standby for possible activation after the NGCP raised the alert. Meralco also said it is ready to implement manual load dropping or rotating power interruptions if instructed. Now, heads up motorists, you might want to fill up your tanks as oil companies are implementing big-time rollbacks on fuel prices. Effective today, November 29, diesel prices will see a decrease of 3 pesos and 95 centavos per liter. Meanwhile, prices of gasoline are down by 85 centavos per liter. Kerosene will see its prices cut by 2 pesos and 65 centavos per liter. This is the 6th straight week of rollbacks for diesel and second for both gasoline and kerosene. Lower prices of petroleum products come amid high supply of petroleum products in the U.S. as well as low demand due to the lockdown in China. Prices of LPG, however, may see an increase during the holiday season. The LPG Marketers Association sees LPG prices climbing by 2 to 3 pesos next month due to high demand during the winter season. The International Data Corporation reports that the return of face-to-face classes dampened demand for tablets in the country in the third quarter. The market intelligence company says the Philippine tablet market declined 11.6% quarter-on-quarter and was almost flat compared to last year. The education market has been the primary driver of tablet sales in the country since schools resorted to blended learning during the pandemic. With the return of physical classes as well as the looming global economic slowdown, IDC expects tablet market to decline next year. And those are the biggest stories on the economic and corporate front today. I'm Jess Delos Santos. We are One News, all sides, all the time. Don't go away. We'll give you the latest on the local bourse when Businessworld Live returns. Stay with us. And you're still watching Business World Live here in One News. I'm Jess Delos Santos. Now, the local index bucked the sell-off across Asia on Monday as tensions mount in China, at least over the weekend. That's over COVID rules demonstrations. But again, those tensions in Beijing are starting to cool down. This as police presence grows to thwart a repeat of the weekend's rallies. If we try to take a look at how Asia is performing so far at the start of the trading day here, you'd see things looking very mixed here, with of course Chinese indices starting the day in the positive territory here. The likes of the Hang Seng up by 1.8%, as well as Korean stocks here. The Kospi is in the green, up by 0.4%. Aussie stocks also some muted gains here. But as you can see, the topics in the Nikkei Japanese indices starting the day in the red here, with the topics down by 0.4%. But of course, we're also taking cues from the US here, as some Fed officials signal that more rate hikes are in the offing as inflation risks remain elevated and that markets may be underestimating chances of higher rate hikes. But over in the local bourse, let's see how the main index is performing so far. As you can see here, starting the day here, shedding some points. We are at least down close to 1% already. 6,617.62 here for the main index. That if that continues, that's going to snap a 5-day rally here, with the index, of course, breaching 6,600 yesterday as net foreign buying continues. Today, though, we have to take a closer look at our leaders and laggards here. You see number of losers here far outnumbering our gainers, with only a couple of blue chips here starting the day in the positive zone here. Metro Bank, our worst performer so far, down 2.9%, as well as port operator ICTSI also edging lower by 2.5%. But you have a number of power-related stocks here starting the day in the red here. The likes of GT Capital down 1.9%, as well as AC Energy. ASEN, at least so far, is down by 1.5% here. That, of course, is going to be very crucial here. That's on the back of SMC Global Power standing by its appeal versus the ERC's ruling junking rate hike petition in its power service agreement with Meralco. They are saying that they are just exercising their right to due process as it filed for an appeal, which the Court of Appeals granted. Now that, of course, put in force a 60-day TRO against the ERC decision. This, as ERC's decision, will push them, according to them, to incur billions in losses. At the same time, Meralco, on the other hand, now urging bidding exemption for 1,070 megawatts of emergency power supply agreements. This, at least, in order to shield their customers against a volatile and potentially higher wholesale electricity spot market price that, according to them, may amount to some 12.6 billion pesos, burdening consumers more compared to the rate hike request by SPPC, the unit here of San Miguel Corporation. Now, the impact of the TRO may be reflected in the January generation charge. This comes, of course, as you have the President himself calling on the Court of Appeals to reconsider its TRO. Looking at this chart right here, this 3-day chart, 288 apiece. And that's it. Register for a free account now at www.signalplay.com and stream One News live anytime, anywhere. I'm Jess Delos Santos. Stay safe, Philippines. We are One News, all sides, all the time.